Hey kids, how you doing? It's Karen from Top Broker Network Real Estate, and we're going to talk about current market
Yeah.
today. And who is this guy, right? Well, this is Jaime Turan.
Mm-hmm.
We've worked a few times. He's a lender
Yep.
from Finance of America. He is awesome, and lending is something that I think there's a lot of misinformation about lending and lenders in general, and so you're not going to see that on HGTV. So let's just start with the basics and ask Jaime, why is a lender important?
Okay. All right. That's a great question. So I think that there's maybe two parts to that question: is what do we do as a lender, and why is it important to a real estate transaction? So what do we do as a lender? We make underwriting decisions to be able to lend money to buy real estate, residential real estate. And so there's typically four parts to an application when you have a client that's coming in to buy a property. There's four parts that we'll underwrite and review and analyze. We analyze the credit, income, assets, and the collateral. So credit goes down to the credit score, to the credit usage, to the type of credit, to the history of credit. Anything that shows a pattern of payment and debt usage, usually over the last 7 years. The other thing is that we'll look at the income. What are the different sources of income that the client has? Are they self-employed? Do they work for a company? Do they have any ownership interests in any business? Are they retired? So depending on the different sources of income that the client has, will dictate the documentation that will be required to be able to support the client's income. So we'll look usually at a 2-year snapshot.
Okay.
Depending on the loan program, we'll look back 2 years, but we'll also have to make an assessment of the likelihood of the continuance of that income moving forward. So we have the credit, income, then we have the assets. Assets is the down payment. Where's the money for the down payment coming from? Does the client have a pattern of saving money? Is the money in retirement accounts? Is it in mutual funds? Is it in life insurance? Where does the client have their money? What are they doing with their money in terms of where they're saving it? And the last thing that we look at is the collateral. Is a property in overall good condition to be able to put somebody to live in the house?
Okay.
So depending on the loan program is going to dictate what will be needed in terms of the condition of the home. So we do pretty much every single type of loan: conventional, FHA, VA, jumbo, 80-10-10s. And so depending on the bucket of underwriting that we're working in is going to dictate essentially what documentation is needed for the client.
Okay, that sounds very complicated, actually. This is why it's not on HGTV. Okay,
Yeah,
but
it's not very exciting.
But I mean, it's really important
Yeah.
to know this before I would work with a buyer, then go talk to Jaime first. So why do you think it is that people are so reluctant to talk to you? Maybe, but they're reluctant to talk to me because they have got Redfin and Zillow, and they don't want to feel like, okay, look, I just want some information. I don't want you to sell me anything.
Yeah.
So tell me about that. Like, people are so hesitant, even though it's really important in this current market or any market, to know what you're dealing with.
Yeah, I think like most of us, we most of our decisions start with a thought. And I want to get a general idea of where things are at.
Okay.
When you're just trying to figure out, you're trying to get a general idea of where things are at, that's a perfect place for you to start reviewing your financials with the lender and say, hey, what do I qualify for on today? I'm not ready to move forward, but if I was, what would I look? What will my what does my purchasing power look like based on today? I have a 680 credit score. I have $40,000 saved, and this is my income.
Is there a cost for that?
Absolutely not. No,
Okay.
There's no cost. There's no commitment. You're essentially you're exploring your options. You're researching what the options are. You're never committed to moving forward by doing that. So if I have clients actually I've worked with in the past that haven't been ready for a year. Sometimes they need to save more money for the down payment. Sometimes they need to pay down debt. And they don't know that it's going to take them X number of months to be able to pay down some debt or pay off a car loan. And so by you being proactive and even looking at 6 months out, you're able to position yourself to get much better financing with a much better interest rate because you've done your due diligence ahead of time. Due diligence. Yep. It pays.
It really
pays,
does.
Yeah.
Well, okay, so can we come back and talk again?
Yeah, absolutely.
Okay.
Yeah, let's.
Because there's layer upon layer, and it's also important to remind you guys that we work as a team, and when we're working with a buyer, it's not just Jaime, it's just not just Karen. We work together for that particular client.
Yep.
And so it's a collaborative effort. And so thanks so much for joining us. Thanks, you guys, for coming, and we'll see you next time.
Yeah.
Okay, ciao.
Bye.